Hey, good evening, everybody. Welcome back to another episode of the Market Forge with Brad Hesselberg. Today, we're going to be going over a very common new investor or even ongoing investor mistake that I see all the time. Now, before we get going, as always, this is not financial advice. I am a financial advisor, but I'm not your advisor. I don't know enough about you to give actual advice. So this is for educational and entertainment purposes only. If you are interested in financial advice, I do have a link in the description below where I give people ongoing financial advice on anything from stocks, bonds, even into crypto. So if that's something of interest to you, click on that link below and feel free to take a look at it. And if you have any wondering, how does he look at the markets? How does he get the understanding that he does? I did put together a PDF that goes over kind of the way I look at things, the way that I think, and what my focuses tend to be when I'm looking to get invested. But without further ado, we'll go ahead and jump into the video. Look, last week, Bitcoin showed us what true volatility looks like. Absolutely sold off. You go into crypto Twitter, people were freaking out, people were spooked, saying it's all over. We got to get out. It's now the Jeffrey Epstein coin. It's always something, right? There's always some fear as to why this needs to sell off. But the truth of the matter is that this isn't unusual for Bitcoin. This isn't unusual for markets, right? This is where the risk and the fear comes into play. What the real issue is that most people do not invest with a plan. So that when things get volatile, things get emotional, and then they make emotional decisions as opposed to logical decisions, which are best supported by a plan. So that's what we're going to talk about today. Look, most people think, and their common belief is that crypto is too volatile, markets are too volatile, markets are manipulated. I'm not trying to time the market, or I have bad timing, or one of my favorites is, oh well, I'm just an investor, right? I don't need a plan. I'm just going to buy something and hold it until it's worth more than it is now, which going back in time, that has been a good trade for people that bought, Apple, they bought Tesla, they bought um, Nvidia. Those have turned out really well. But if you go back and look at, I don't know, Bear Stearns, Enron, Yahoo, there's multiple other ones that you could have bought with no plan and said, I'm just going to hold these for the long run. And you'd have been cooked. You would have cooked your portfolio. Everything you put in there would have been down to zero. So, no predefined plan for buying, selling, invalidation, or risk is the wrong way to go. Okay. So, we want to take a look at the Bitcoin chart because this is going to give us. I just want to point out some things and help you understand how simple it is to put together a plan when you're looking to get invested. So let's pull up our Bitcoin chart. Okay, there it is. I pointed out some key opportunities that if we were going to get into the position, this is how I would look to go about doing it. So here's our first one, and it's really very simple. Okay, there's a tool over here that is going to help you identify long and short positions. That's what we did here. So we put together just a tiny plan. Okay, now I'm not going into position sizing or anything like that. If that's something you want to get into greater detail on, that's certainly a video that I can put together here in the future. But just know this is something that I help people with as part of what I do. So I have a real basic tool here. We saw, let's say we were watching this momentum wave and we were saying, hey, this looks pretty bottomy to us. There's certain reasons why this would look good. Your money flow is cooling off. It's been red for a while, and it looks like it could be curving back towards the green, the underside. You have your RSI separating, which usually looks pretty bullish. And then you had, multiple waves above this white line, which could indicate a good opportunity to get in. I'm not saying that that's how I get into positions or anything like that. It's certainly something I look at. But let's just say, for instance, this is what we were looking at. We said, hey, this looks like a great spot to get in. And in truth, it would have been. And we didn't even have to buy the bottom. So like in this instance, we're not even buying the bottom. We're buying this candle after this one because we said, hey, this looks pretty good. Okay, so we simply figure out where our stop loss is going to go, which goes down here at the bottom of this red box. Okay, this line right here is we buy, and then we draw this out thinking, hey, maybe, hopefully it gets back to the previous high that was over here at 109,000. Okay, that's perfectly reasonable. That is how you map out, your next buy. And I love the people that come back and say, well, I'm an investor. I'm not a trader. That's what traders do. No, that's what good investors do. Bad investors say, well, I'm just going to buy this asset and hold it until it's worth more than it is now. That's not a plan. That's a hope. That's a dream. You don't know that that's going to happen. The best investors still have invalidations. They still use stop losses, or they have some strategy that they use so that they know when the trade has gone sideways on them, because you can't just assume that everything go up forever. That's not how it works. And there's plenty of people that have sort of lived by that strategy and it's blown up in their face, yet they still don't seem to realize they need to put together a plan. Anyway, I'll get off my soapbox on that one. Anyway, so this is a real basic plan of what we get into. Now, there's position sizing, there's risk reward, right? So here we're looking at about 3.8% risk. Not too bad. You typically want your risk to reward ratio to be 1 to 3. I mean, if you're going to be an investor, you want it to be higher than that, and you're going to be buying and spending less, taking less opportunities, or taking less trades or buys, or whatever you want to call it. Okay, so this one, it's a beautiful risk reward. Okay, even if it was wrong, you'd only lose 4%. If it continues to trend to the downside, you're down 4%. That's okay. But you have a beautiful move to the upside here. That's exactly how it turned out. Did it continue to go higher? It sure did. But we had our opportunity to sell. Some people will take their profit halfway through this. Maybe they say, hey, we got some consolidation here. I'm just going to go ahead and sell part of my position and then take the rest of the profit up here. Now, if you're one of those people, it's like, well, I want to get all of it. I want to get the full move. Then you can do what I refer to as like holding on to a moon bag, where you sell 75% of your original investment, and then you just let the rest of it ride from there. That way, there's no emotions connected to it. It's all very logical, and there's a plan. See, you'll see a repeated pattern with what I talk about and how I like to invest is have a plan, have an invalidation, have a position size, understand where we are in the market cycle, and how much upside we have potentially, right? It's not going to just go up forever. There's very common market cycles that play out where you have these times where you get volatility to the upside, and then you'll get some times where there's volatility to the downside. Understand where you are and what's going on around you, which is another thing that I help investors with all the time. Here's another trade that we got into. All right, we saw another momentum wave here. Looks pretty good. Again, our RSIs are opening up, and our red is cooling off, and it looks like it wants to flip green. So we have a nice potential move here. Now, if I'm looking at this, I'm well aware of the fact that Bitcoin has been going up for basically 3 years. So is the top are we closer to the top than the bottom? You bet. So I want to make sure that I'm minimizing my risk and maximizing my reward, and understanding this isn't going to go on forever. Anyway, so we identify this move. It looks really nice. We get into it. Our risk reward is beautiful. Even if we miss, it's a 2% loss. And we're looking at, a risk reward of 7.25, 15% to the upside. Where are we getting out? Oh, at the previous high over here. See, it's very logical. It's very planned out. There is an idea here that we want to continue to repeat. Create a plan, understand position size, and invest, and make sure you have the proper risk reward. This is a great opportunity. And somebody might say, well, Brad, I'm an investor. I'm not a trader. That's not what I'm looking to do. Any investor would take a 15% move to the upside. Okay, if the S&P does that in a year, people are absolutely thrilled. And you're going to tell me that you don't have any interest in potentially good, like understanding how this works. And if you want to just be a long-term investor, that's fine. Then you shouldn't be buying right now. That's my personal opinion. You should be buying very little right now, unless you're buying stuff that is maybe trending to the upside right now, like I don't know, energy. But even then, I'm not trying to hold that long term. That's a contrarian play. If I'm buying, if I'm specifically an investor, then I'm buying in the bear markets. We're not in a bear market, at least not yet. Here we have, so this one didn't go our way. Okay, so we had our stop loss. So 3.2 is going to be the worst. But let's say we bought here again. We saw this big wick to the downside. We got a green dot a little bit later, so we said, "Hey, let's get in. I'm going to buy a bottom here." We tried to catch a falling knife. We got it. Great job. And then we rode it out. We had some volatility. We hung in there, and we hung through it, and it continued, but it never hit our take profit, which is in line with the previous high. Good logic there, but it didn't make it. It never made it to that spot. So in this case, we had a pretty clear what they would call a bear flag, where it looks like it's coming up, right? But it's grinding really slowly to the upside. If we had identified this, maybe we had decided to just take a little off the table here as it hit a high, just because we were nervous about it. We had held long enough, and then it just starts to roll over. Okay, we would hit our stop loss. Ultimately, just a 3.27% loss. Not terrible. Um, there's a good chance you probably would have sold out of this position. It did not look great. But if you didn't, you at least had a stop loss and you didn't hold through all of this crap. Okay? Because that's what happens. That's literally what happens. I know friends that have done this. I know that investors that have done this, and I've done this, where you don't have a plan. And this is where I learned. This is where I learned this stuff. This is why I learned this stuff, because these things make me mad. I don't want to do this. I don't want to do this, and I don't want other people to do this. So you could have invalidated, waited, and then sat, trying to figure out when the next opportunity to get in would be. See, that's why stop losses are great. It takes the emotions out of it. It helps you create a coordinated plan to make sure that we don't end up in this crap. Okay? That's a 40% move from this high. No, thank you. I don't want to be in that. So I hope that makes sense. I hope that makes it clear as to really kind of what I'm driving at here. Um, the psychology, and I've said it, and I will say it again. Without a plan, you get fear at bottoms, emotions, right? We don't have a plan, so logic is taken out of it. We get fear, we get afraid, and we probably sell bottoms. Okay? We've all done it, but you don't want to do it anymore. You get greedy at tops. You think that it's just going to keep going on forever, okay? Because you didn't put together a plan. Again, your emotions is trumping your logic, and then you regret selling your position because you didn't know when you were going to sell it. You didn't know what to do with it. You sold the bottom, and you're like, man, I wish that I had put together a plan. I wish I had done something other than just saying, I'm going to buy this and I'm going to be an investor. And then emotionally, you sell your position because you had no plan. So without a plan, or when you have a plan, you're calm during drops, especially if part of your plan entails holding on to cash or dry powder, which I encourage. You're patient while you're sitting in chop because you have your thesis, you have a plan put together, you have an idea of where you want it to go and where you're going to take profits, and you have a stop loss, right? So if we chop, 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 and then you hit your stop loss, that's fine. We can find another opportunity to invest our position, and we have confidence. A plan is everything. If you've ever been in a situation where maybe you were maybe you had a school project when you were in high school, and you didn't put together a plan. You just rushed and got something done, and then you got probably a mediocre to poor grade on it. And then you learned from that, and you said, I'm going to plan Accordingly, I'm going to plan ahead, and I'm willing to bet that your outcome for that project was a lot better the second time around. This is the exact same concept. So, just to be clear, a real plan includes position sizing, entry zones, exit zones, invalidation point, and time horizon. Okay? If you don't understand what that is, put a comment below. If you guys want a video that we go into this a lot more thoroughly, where we actually talk about how we figure these things out, I'd be more than happy to do that. Look, the truth is that most investors don't fail because they choose the wrong asset. They fail because they never defined how this trade or this investment is going to behave. There's no plan. You don't need to predict markets. No one has a crystal ball. No one can predict markets. You need to decide how you're going to act when certain things happen within the markets. Look, one serious decision can create a plan, can change your entire investing life. If you found it useful, click on the subscribe button below. Hit me with a link. It's much appreciated. But that's all I have for you today. Thanks for stopping by and have a great day.